We're seeing indications of another market shift, but nobody seems to be paying attention. This is the weekly report on Major Money Matters. Welcome to Major Money Matters. My name is Major. I'm the host of Major Money Matters. I'm a mortgage broker powered by Edge Home Finance. And this is the weekly report where we talk about economics and how it may be affecting your home buying or your home selling process. Lots to cover this week, so let's jump right into it. Let's start with the charts. All right, so we saw last week, on Thursday of last week was a huge day where we got CPI numbers. And on that day where we got CPI numbers, you see that big green candle to the right of your screen. That candle meant that interest rates dropped the most that they have dropped since 2009 in one day. So that was a very good day. And then the question this week was, how much would we actually retain what we had gained? Now we started giving back a little bit at the beginning of this week, but in general, we're staying about, where we were on Thursday. So it's been some very good pricing for mortgage rates relative to what we've seen over the past 6 to 7 months. So let's throw up the actual numbers here. So charts mean nothing unless we can match them with numbers. Let's throw up the Mortgage News Daily. Now, this is just a metric that I keep up to have some consistent way for you to measure where rates are going. And you see these numbers here, according to Mortgage News Daily, these are not actually an offer to lend or quote or anything like that. These numbers are all considered 20% down, extremely good credit score, okay? So keep that in mind. I just like for people to know in general where rates are. So these numbers are pretty close to what I showed you during last week's weekly update. So we're kind of staying consistent with where we are right now, and that's actually good news. We're gonna have to see how news comes out next week, and if we can move above some of those resistant levels, those parallel lines there. I won't get into the technicals on that, but those horizontal lines, those are different levels of resistance that we'd have to break above in order for rates to go lower. By the way, if you're new to the channel, this is an MBS chart. As this line trends up, interest rates are going down. As this line trends down, interest rates are actually going up, okay? So let's get into some news here. All right, so we got existing home sales report this week. And headline here says existing home sales fall again in October. Leading indicators signal economic downturn. What we are seeing, there are many warning signs of a recession, okay? So I won't beat that with a dead drum, but I do want to narrow in here on some of the different indicators or different numbers that we're seeing in the existing home sales report. 1 in every 6 homes being bought are being bought by investors. Now that could be individual investors or institutional investors. And I bring this up because that's 1 in every 6. That's a very, very high number of each home that's being bought by an investor. And I was like, that can't be right. And then I went and looked at my own pipeline with my buyers because, sometimes I don't pay attention to the different situations of individual people or the collective people. We just get the loans in, we're processing loans and everything. We're making it so it fits to that buyer. But collectively, I looked at my pipeline. I'm like, oh crap. There's a lot of investor loans, even in my personal pipeline for loans that we're doing, whether we're doing them like a conventional investment loan or a DSCR or something like that. There's a lot of people buying investment property. And I say this because I will have individual buyers that say now is not a good time to buy a house. But then I have buyers who have funds and buyers who are very financially astute, and they are buying up property because they believe that now is a really, really good time to buy properties. And we're seeing that reflected on the existing homes report, where 1 in every 6 buyers are actually investors. Cash buyers are went from 22% up to 26%. And I was like, wait a minute here. And I've seen this happen a couple of times in the last couple of months, where I've had a buyer put in an offer and they come back, it's like, hey, we were beat out by cash. And I'm like, they're still doing that? I didn't know they were still doing that. But yes, there are a lot of cash buyers out there. It went from 22% to 26%. That's 1/4 of all homes are being bought with cash. That's pretty impressive. So that's one point that I wanted to draw in the existing homes, because the headline will tell you one thing, but I like for you to think about what else is going beyond the headline, and that's going to be important here when I get to something else. All right, let's look at this other article here. Annual single-family rent growth decelerates. All right, rents are still up. Okay, rents are up on a national level. They are up 10% year over year. Rents are still up 10%. However, they are decelerating, meaning that the rate of the increase is going down, which is deceleration. Okay, but that is a very good indicator for the inflation numbers, and we know that the greatest impact on mortgage rates is inflation. So as we get to a point where we see all these deflationary indicators, we are going to start to see mortgage rates continue to come down. Okay, and I'll get to my assessment here at the end. Finally, I want to bring up this, by the way, don't know if I said this, but the single family rents are up 10% year over year. So people are saying, hey, interest rates are at 6% or something like that. They were at 7%. Now we're at about, low 6s or something like that, depending on your program. And they say, hey, interest rates are still high. First of all, let me tell you, interest rates, people are locking at 6%, but about 50% of my buyers are actually doing 2-1 buy downs. So they're not paying 6%. They're getting like a 4% or something like that. And they're in that interest rate for 12 months at 4%, and then 5% for 12 months. And then they're at 6% if they do not refinance that home. So really, yeah, interest rates are at 6%, but many people are not actually paying 6%. So that's another point I wanted to bring up. Finally, let's get to this. Diana Olle came out with her fear mongering again. CNBC is very interesting. They come up with this article that says sharp drop in mortgage rates does little to boost demand. So they're referencing this drop that we had on Thursday. That was a sharp drop, very sharp drop in mortgage rates, especially to happen in one day. It said it does little to boost demand. But, and this is talking about mortgage applications. All right, but the interesting thing is mortgage applications actually rose this week by 4.4%. And people will say, well, that doesn't really matter in the grand scheme of things. But my argument is it does. If you have a sharp drop in mortgage rates and you see mortgage applications increase by 4.4%, which is the largest increase that we've seen since June of this year. So in about 5 or 6 months, this is the largest increase we've seen, and it was propelled forward by this sharp drop in mortgage rates. What do you think is going to happen when mortgage rates continue to go down? And the thing is, people are like, hey, we're going to have a bad year next year. It's going to be a tough 2023. I believe it may be tough because when the mortgage rates go down, people are going to start to realize that, oh crap, we still have a huge inventory issue. Builders are still not building. As part of the existing homes report, it talked about the builders are still not building at a very high rate. There's not a lot of home starts. Okay, those home starts are down year over year. And you're gonna start to see the fact that people are gonna have multiple offers on their homes again. Sellers are gonna have multiple offers on their homes again. I do believe that will happen near the second quarter or so of next year, which is why I believe if you're a buyer, you actually have a limited time to take advantage of concessions being given by sellers. I think that's a limited time thing because as these rates continue to come down, I believe rates are going to drop again. When those CPI numbers come out, you're going to see that inflation is coming down, or the rate of inflation is coming down. And I believe investors are going to respond to that. And interest rates are going to go down again in December. Are you going to see a dramatic drop like here? No, I believe we're going to see an incremental drop going into next year, into the first quarter of next year. And as those rates get lower, sellers are going to have multiple offers on their homes. And they are not going to be incentivized to give concessions when they have 4 or 5 offers on their homes when there is simply not a lot of inventory. The only reason inventory is hanging around right now is because perceived higher interest rates. But realtors that are educating their clients and talking to them about things like 2-1 buy downs and stuff like that, they are moving homes. And the fact that rates may be at 6% or something like that, people are not really paying 6% because they're taking advantage of incentives in order to lower those interest rates. So if you're a buyer right now, I'm going to play this back in about March or April of next year. And I don't like to be the I told you so person. Because even right now, when people I was saying, hey, rates are at 4, they could go higher. When I was saying that previously, I was like, get in a home now. And I have buyers coming back saying, well, crap, I wish I bought a house 6 or 7 months ago. But if you're a buyer right now, I think you should be buying a home. And then when rates go down, you refinance that home. You get a lot of incentives right now, whether you're even buying a new build or buying a pre-owned home. It's a great, great, great opportunity right now. But I think the window is it's going to be open for about 4 more months, and then that window's going to be closed. It's just my opinion. See you next week. We'll let you know what happens next week. See you next time.